Today we're going to go over something that's very important to watch, but it's also something that's important to consider for your portfolio: gold. Now, this is a chart from 2008 to today, but what I want to reiterate here is the higher time frame you go, the better. It's better to look at with the big picture of anything really, from gold to the S&P. That's the way to look at things. So here we see 2008, a run up to 2012 of up to 1920 an ounce from about 800 and change, and then back down and just apathy back and forth. Now, one of the main things about gold is it's a good way to gauge how governments are doing their job, one, and how people are feeling about the world. The more geopolitical instability there is, gold tends to go higher off of that. So what we see here is gold has just been in this, over the past 5 years really, a range from 1400, and that's really been the ceiling, bumping up again and again, all the way down to about 1050 to 1080 an ounce. Now, I would argue that 1400 is that line in the sand. It's that Maginot line that once it breaches to the upside, you can expect a lot of stops. A lot of people that are short gold that think it's going to sub 1000, those are going to get taken out, because 1400 was that line in the sand where there was a lot of support before. And as soon as that broke to the downside, we saw 5 years of nothing but back and forth action. So once it breaches 1400, you're going to see a lot of stops get taken out to the upside, but you're also going to see longs step into the game here. What I expect, and this is not financial advice, is, and this is just based on history, if we do break 1400 to the upside, we will likely test 1400, we'll pull back and test it. If 1400 at that point becomes support, you can expect to see gold create its higher trend to the upside. Now, one of the main things that's happening in the world right now is half of the currencies in the world, this chart versus those currencies, whether it be the Australian dollar or the Afghani or the Afghani, gold is making new highs in these currencies. Emerging markets throughout the world are losing their purchasing power versus gold. The dollar, however, has been extremely robust, mostly due to the euro pulling down to the 114 range. And that's causing gold to just get stagnant here, back and forth. Really, in my opinion, there's been a lid kept on gold for whatever reason. I would argue that it's manipulation. Governments have a great interest in keeping gold sequestered. The higher gold goes, the more people get frantic into buying it and pushing it up even further. So it's in the best interest of large governments around the world to keep gold in a range or range bound where people forget about it, which is very interesting when it comes to that. One of the other things is central banks around the world that are not aligned with the geopolitical goals of the United States are accumulating gold to a very, very large extent. Russia, China, and a lot of the stand countries, not only do they produce gold, but they're hoarding it, just in case they feel for any type of geopolitical instability that causes the dollar to not be the medium of exchange for goods. That would be a big reason for gold to go up significantly. Guys, one of the things the dollar does around the world, 70% of transactions that are bought and sold, whether it be polymers out of Vietnam or fuel oil going to somewhere out of the Middle East and into Africa, most of these transactions are cleared in US dollars. So there's this constant need for dollars to be the medium of the exchange, which provides in the United States a healthy lifestyle for the citizens. But that will only last so long to where the government of the United States can keep that system in place. What I'm saying is the dollar is at risk from falling from that reserve currency status to be the medium of transactions for commodities. If that occurs, we would see the dollar fall significantly and gold go up significantly. Watch this very, very closely. 1400 is that Maginot line, and triple tops never hold. Historically speaking, we made that low around 1050, 1080. If we break 1400, that'll be the third attempt at 1400. Triple tops almost never hold. Gold is not only something to watch, it's something to think about how you implement a strategy to either buy or sell. Once we approach 1400 again, consider buying put spreads. So just in case there's apathy for the next 6 months, 3 months, whatever that may be. Now, past that, it's very important to know that there's a lot of call buying at strikes 1550, 1600, even a lot higher than that for what I would like to call the asymmetric bets. That's just in case gold breaks 1400 and goes a lot higher. Do not hesitate to put your questions below. This is a very important topic, and it means so much to everybody's bottom line, both outside the United States and inside.